Hello friends, in our last video, we checked the definition for current assets and current liabilities as per IFRS. In today's video, let's analyze two events where the situations involved decide whether the liability involved should be classified as current or non-current. Hi, my name is Pratij and welcome to Deep Dive into IFRS. The first situation is rescheduling of a loan. Suppose you are an entity to whom IFRS is applicable and your financial year is from April to March. Now you have a bank loan which has to be repaid in August or September. That is within 4 to 5 months from the end of the reporting period. Now as such, as on 31/3, that is 31st March, this liability is a current liability only. But on April 5th, you approach the bank asking for a rescheduling for a 2-year period. And the bank comes back to you on April 12th, granting this reschedulement. So you don't have to pay the loan back in April or September. Now, this is an event happening after the balance sheet date, but before the approval of financial statements. Now, in this case, should this liability be treated as a current liability or can it be changed to a non-current liability? Now, as per IFRS, a liability can be treated as a current liability if the entity has an unconditional right to defer payment for a period of more than 12 months after the reporting period. But in this case, as on 31/3, the entity does not have that right. It still has to honor that payment by August or September. So, as per IFRS, the liability continues to be treated as a current liability in the books of accounts. The second event we are going to discuss about is breach. And within breach, there are three situations. So, let's take the first situation. The details are same as the previous situation. That is, you are an entity to whom IFRS is applicable and your financial year is from April to March. Now, you have obtained a loan from bank with the condition that by 10th of March, as a promoter, you have to bring in at least 2 million USD into the bank account. But unfortunately, due to some reason, you are not able to bring that $2 million into your account by 10th of March. And as per the agreement, if the promoter contribution doesn't come by 10th of March, the loan gets repayable on demand. So, in this situation, as on 31/3, the loan will be treated as a current liability only as it is repayable on demand. But suppose on April 5th or 10th, you bring that $2 million into the account and rectify the breach. So, this is also an event happening after the balance sheet date but before the approval of financial statements. Now, in this situation, as the breach is rectified after the balance sheet date, does the classification change or it continues to be treated as a current liability in the books of accounts? Now, in this situation, IFRS and IAS prescribes different treatments. As per IFRS, the breach is rectified only after the financial books are closed, that is after 31st of March. So, the liability continues to be treated as current liability in the books of accounts. But in IAS, even though the breach is rectified after the closure of books, it is still okay as the financial statements are yet to be approved. So, as per IAS, the classification changes from current liability to non-current liability. Now, situation 2. The basic details are the same as in situation 1. The breach happens on 10th of March. You're not able to bring in $2 million into the account. So, as per IFRS, the liability has to become current liability. But before 31/3 itself, that is say on 15th or 20th of March, you approach the bank requesting for a grace period. And the bank allows you a grace period of 6 months to rectify the breach. So, in this situation, as on 31/3, should the liability be treated as current liability or non-current liability? Now, the 12-month rule as per current liability has to be analyzed here. The rule is that the entity has to have an unconditional right to defer settlement for at least a period of 12 months after the end of the reporting period. In this situation, the grace period given is only for a period of 6 months, which is less than 12 months after the end of the reporting period. So, the classification of this particular loan continues to be current and it has to be shown as current liability only in the books of accounts as on 31/3. If suppose the grace period was given for a period of more than 12 months after the end of the reporting period, in that case, the classification would have changed from current liability to non-current liability. Now, the third and the final situation in breach. The basic details remain the same, but the only difference here is that you know that you are not able to bring in $2 million by 10th of March. So, what you do is, even before the breach happens, say on 5th of March, you approach the bank and let the manager know that you would not be able to bring $2 million into the account by 10th of March and you ask for a grace period in advance. And the manager agrees also. He gives you a 6 months grace period. Now, here, should the loan be treated as current liability or non-current liability? Because of the 6 months grace period thing, you might have a confusion because in situation 2, the less than 12 months, more than 12 months rule was used. But the main point to note here is that there is no breach at all. Even before the breach, you approach the manager and get a grace period. So, as on 31/3, technically there is no breach. So, as on 31/3, you can treat this loan as a non-current liability. I hope this case study was useful to you guys. If you have any queries regarding this, please leave a comment and I'll be happy to answer. Till I see you in my next episode, thank you for your valuable time.